What is the Singapore corporate tax regime? Or this video is actually created to be a Singapore corporate tax guide to give you quick overview about corporate tax rules and procedures in Singapore. So the brief agenda of this presentation is first I will explain tax basics, then timeline for filing. Some exemptions are available for new startups, so that I will explain. Assessment notice and procedure of payment and dividend income. So let's proceed ahead. First question is, what is corporate income tax? I think I don't need to explain this, as every business in every country has to pay some form of income tax and you will be familiar with this. But just to summarize, this is a tax which is paid on corporate income. So the income that your company is generating, they will have to pay taxes to the government, and that is what corporate income tax is. In Singapore, the rate of corporate income tax is 17%. So 17% on your company profit are charged by government as a form of income tax. So the word that is important to note here is company profit, and profit means sales minus the expenses those were incurred to generate that profit. In addition to this, there are exemptions available for new as well as existing companies. So I will explain those exemptions in few slides later on. So let's go through one example here. I am showing here two hypothetical companies, company A and company B, with different levels of sales and expenses and net profit. So as you see here, in company A, the total amount of sales is 250,000 Singapore dollars, and they have incurred expenses on salaries, rental, IT expenses, cost of goods, and so on. And after deducting all these expenses, the net profit of the company is 38,000. So the tax will be levied on this $38,000 amount, which is sales minus expenses. And at 17%, the amount of tax payable for company A comes out to be 6,460 Singapore dollars. Similarly, for company B, the net profit amount is higher, which is at around 222,000 Singapore dollars. So at 17%, the tax payable by this company is 37,740 Singapore dollars. So let's move on to the next slide. Now talking about corporate income tax filing, for every company, there are two filings to be done every year. So this filing is to be done after your accounting year is complete. You have to file estimated chargeable income with IRAS, Inland Revenue Authority of Singapore. So what is estimated chargeable income? It is a kind of advance notification, filing of estimate, or you can say advance tax. So different countries have different terminology for this. But what basically it means is you are doing a quick assessment of your income for that year and you are informing it to the government authorities. Once you file estimated chargeable income, based on that estimated chargeable income, IRS will send you a notice of assessment and you are required to pay the estimated tax amount. And then final tax filing happens, which is by way of a corporate tax return, which I have shown in the box on the right hand side. It is to be filed by the 15th of December in the assessment year. So by this time, it is expected that you would have finished all your accounting and all your adjustment entries and everything is finalized, and a final figure on which the tax is to be paid is available. So this corporate tax return is filed in the next year of the year in which the accounting year ends. This might be a bit complicated for somebody, so let's have a look at one example. So here I am going to show you a timeline. So let's suppose that the company was incorporated on 25th March 2020 and it has declared its first accounting year end to be February 2021. Since the accounting year is on February 2021, there is no corporate tax filing in the year 2021. because 2021 becomes the basis year, the year in which accounts ended, the year in which accounting period ended. So the due date for the corporate tax filing in this case is 15th December 2022. Yes, there is almost 2 years gap in between, because the rule is in the year in which your financial year end, the next year 15th of December is the time limit by which you have to file corporate tax return. So as you can see, we have almost 2 years of gap between these two dates. So that will mean that IRS is going to get the tax payment quite late. And that is the reason why there is a mechanism called estimated chargeable income. So after the financial year closes in February 2021, you will do first filing in 3 months, which is of ECI, and that needs to be done before May 2021. And once that is done, IRS will send you first notice of assessment, which you will have to make the payment. And then by 15 December 2022, you will have to make the final submission of corporate tax return. And again after that, IRS will send you another notice of assessment. If the amount is same, you don't have to pay any additional taxes. If the amount in corporate tax return has increased by some amount, then you will have to pay taxes only on the increased amount. Similarly, if the amount of income declared in corporate tax return is lower than ECI amount, then you will get the refund. Now I will show you where you can generate this timeline for your company on the internet. So what you need to do, you need to go to IRS website and you have to click on new company startup kit and open it. Now here you put the tax reference number, your date of incorporation, and this validation code. So let me put this. So once you click OK, you will come to the next page where you will have to answer some of the questions. And the first question is, what is the financial year end? So let's say that it is in March 2021. I'm using an accounting software. Once you enter these details, you will come to the next page where it will show you the summary, and the IRS system will explain you the timeline. So this is the way you can get this information for your company. So I will move back to the presentation. Now the next point is about the exemption of new startups and exemption for existing companies. So the tax exemption for new startups is available for first 3 years after the incorporation, and the rules are as follows. So from assessment year 2020 onwards, if the company is newly incorporated, first $100,000 income, out of that 75% income will be exempted from tax. And next $100,000 income, out of that 50% of the income will be exempted from tax. So this was the exemption for new startups. Similar way, there is an exemption for all other companies who are not claiming the exemption for new startups, and the rules thereof are as mentioned here. For the first 10,000 income, for the first 10,000 Singapore dollar income, 75% income will be exempted from tax, so that amount comes to be 7,500. And out of next $190,000 income, 50% income will be exempted from tax. So both these schemes are quite similar, except that for new companies there is a more exemption, because for first 100,000, 75% of income is exempted from tax, whereas that amount is 10,000 in the second tab. So having seen this, let's take some examples. So I'm going to show you here same Excel worksheet now extended. So in this case, company A has a sales of 1.25 million and a net profit of 260,000. So out of $260,000, if this company A is a new company, first $100,000 profit, 75% will be exempted. So they will get an exemption of 75,000 from this profit. And next $100,000 profit, 50% will be exempted. So they get that 50,000 exemption. So the taxable income in this case becomes $260,000 minus $75,000 minus $50,000, that is $135,000. Tax payable at 17% on this income will be 22,950 Singapore dollars. And if you calculate effective tax rate by dividing 22,950 by the total profit of 260,000, you will get that tax rate to be approximately 9%. And same way for company B, there is this calculation given. So here one thing to notice is net profit of this company is 150,000 Singapore dollars. So first 100,000 75% exemption, all 75,000 they will get. But next 100k, they don't have next 100k profit. So after first 100k, there is only $50,000 profit. So they are going to get tax exemption for $25,000 only. So in this case, taxable income becomes 50,000 and the tax payable is 17% with the effective rate of 6%. Now let's have a look on tax exemption for existing companies. So this is all other companies which are not falling in the category of new startups. So every other company gets this exemption. So I am taking the similar example. So in first case, net profit is $260,000. So here first $10,000 profit, 75% income will be exempted. So 7,500 income is exempted. And out of next 190k, 50% profit will be exempted. That is 95,000. So if you calculate the net taxable income, which is net profit of 260,000 minus 7,500 minus 95,000, the taxable income will come to be $157,500, on which 26,775 is the tax, and the effective tax rate for this company, which is slightly older and not a new startup, will come to be around approximately 10%. So as you can see in Singapore, there are both types of exemptions available for new startups, which are slightly more, and for all existing companies, which are slightly on the lower side. So if you put it side by side, you will notice that the effective tax rate existing companies pay will be slightly more than the new startups will pay. So few points I want to highlight about these tax exemptions is that these exemptions are available for new as well as existing companies. These act like a small company's relief. So the small companies which are making a profit in the range of less than typically $500,000, they really benefit from this. If your company is extremely profitable and is making maybe $10 million by way of profit, then you will not find significant benefit out of this tax exemption, because these are meant to be of a smaller amount and these are for small businesses. However, one thing that I notice here is small foreign promoters who incorporate a company in Singapore, they can definitely benefit from these exemptions. Because I have seen that statistically more than 80% of these companies will typically have profits less than $500,000. And as I have already shown, effective tax rate is around 8 to 9% because of these exemptions. So having seen the exemptions and calculations, now the question is, what is the process of making tax payment? So as I've already mentioned, there are two filings. One is estimated chargeable income to be filed within 3 months from the end of accounting year of the company. And another one, which is to be filed by 15 December in the assessment year, called as final corporate tax return filing. So at both the times, you will get a notice of assessment as I have shown over here, and it will show you what is your trade income and how much taxes are payable. So in the example I have shown here, the company is in loss, so they don't have to pay any taxes. But if there is a profit, the amount of profit will appear here, for which you will have to make the arrangement to pay the taxes within 1 month from the date of the notice. And the last point in this presentation is about dividend tax. So Singapore follows a single tier tax system, meaning an income has been taxed once, it will not be taxed again in Singapore. So if you have calculated the tax on your company income, and after that you have paid that tax, and then whatever is left after payment of taxes, if you declare it as a dividend. So in our example for this company A, if you declare a dividend of $237,050, or in company B, if you declared a dividend of $141,500, then that dividend is not taxed again in the hands of the recipient. So the shareholder who is receiving this dividend will not have to pay taxes again on this because the income has already been taxed. However, one important point you keep it in mind that if you are a foreign promoter and if you receive this dividend in your country, then your country regulations may have a provision to tax this in your country. So this part you should check with your tax consultant in your home country. So as you have seen, I will say that Singapore corporate tax regime is quite simplified and easy to understand. There are not many complexities or too many different options and provisions. The calculation is simple and filing processes are also quite efficient.
Thank you for watching this video. This video was brought to you by Epica Consulting Singapore. Subscribe to our channel today to get notified when new videos are posted.